You bought a cute little cabin, slapped some string lights on the porch, and suddenly you are a hospitality mogul, at least according to your Instagram bio. But nobody tells you that the tax code actually treats your rental like a tiny business, which means you get to write off a shocking number of things you already spend money on. That is the plot twist nobody warns you about when you start chasing that short-term rental dream. Let us start with the obvious one, the mortgage interest and property taxes on the place you are renting out. You already knew that one. It is basically rental ownership 101, like knowing pizza has cheese on it. Now here is where it gets spicy. Depreciation. The government basically says your house is slowly falling apart every single year, even if it looks fantastic, and lets you deduct a portion of its value annually as if it were a very expensive, very stationary banana going bad. Repairs and maintenance are next, and this is the fun stuff. Fixing a leaky faucet, patching drywall, repainting a wall that your last guest decided to test with red wine. Small fixes like that are deductible the same year you pay for them. No waiting around. Then you have got improvements, which sound the same as repairs but are actually their sneaky cousin. A new roof or a full kitchen remodel gets depreciated over time instead of deducted all at once, because the tax code loves drawing lines that confuse everyone. Utilities count too. Your electricity, water, gas, internet, all the stuff keeping your guests binge-watching reality shows at 2 in the morning. If you also live there part-time, you only deduct the percentage that applies to guest use, so grab a calculator, not a guess. Supplies are an easy win. Think coffee pods, toilet paper, shampoo bottles shaped like little seashells. Yes, the tiny soaps count, and honestly they might be the real reason guests leave 5-star reviews. Cleaning and turnover costs matter a ton, whether you pay a cleaning service or do it yourself and track mileage and supplies. Every changeover between guests is basically a mini business expense parade. Let us talk insurance, because short-term rental insurance is not the same as your regular homeowner's policy, and yes, it is deductible. Skipping proper coverage to save money is like skipping sunscreen at the beach. Technically fine until it very much is not. Property management fees are deductible too, so if you are using a service to handle bookings, check-ins, or guest complaints about the shower pressure, that cost comes off your taxable income. Think of it as paying someone else to deal with human nature so you do not have to. Advertising and platform fees sneak in here as well, so those percentages that booking platforms take are not just annoying, they are deductible business expenses. Same goes for professional photos, because let us be honest, bad lighting has killed more bookings than bad reviews ever could. Travel expenses count if you are visiting the property for business reasons, like inspections or repairs, not for sipping lemonade on your own porch pretending it is work. The IRS is watching, and no, market research does not cover your beach nap. Legal and professional fees are deductible too. Accountants, attorneys, even that consultant who explained all these deductions to you in the first place. Basically, paying smart people to keep you organized pays for itself, like hiring a lifeguard instead of learning to swim mid-drowning. Home office deductions can apply if you manage the property from a dedicated space in your own home, calculating bookings, guest messages, and existential crises about cancellation policies. Just remember, the space has to be used regularly and exclusively for that purpose, not just a desk where mail piles up. So when you add it all up, mortgage interest, depreciation, repairs, utilities, supplies, insurance, management fees, advertising, travel, professional fees, and even a home office, you start seeing how short-term rentals become less about luck and more about strategy. If you want to learn more about maximizing all of this the smart way, check out our links in the description.